Hi everybody, we're going over to Discord to talk with Scope about his trading strategy. So I'm going to pull up the screen here so that we can see. Let me put up the right screen here for everybody. This one here. Okay, hopefully you can now see my computer over here. Here we go, right.
I see it, kind of thing.
Okay, Skip, I've started to stream on YouTube. I'll start watching your screen and pushing over to your screen now for
right.
So that whenever you are ready, let me make that, there you go. Okay, perfect.
Get into position.
No problem.
I've been missing a coffee and a cup of water. So.
Yeah. Bring the biggest mug I can find when I'm streaming.
Yeah, so I don't know how many people's watching. Yeah, just want to go over some of what I find good in order blocks. A lot of people don't trade like I do with order blocks. They just see literally an order block, and then they wonder why it's failed. They don't look further into it, or they just think order block to order block. If you make a strategy up with just trading from this order block to that order block in between it, you're not going to get brilliant results. So just obviously, like I say, it's not like everyone always says, it's not financial advice. It's just what I see and what I trade and how I trade and what I use and what I find that's good for me. Right, so first things first, I did prepare these before I started. Them underneath for me. Right. I did prepare these before I started. So what is an order block? Obviously, I've prepared my charts. Just these diagrams, sorry. Bullish order block, self-explanatory. I know everybody knows what they are, but for the sake of it, I'm just going to go over them. Bullish order block is where big players put orders in for the market to go their way or whatever they want to do. They can't do it all in one because it'll absolutely wreck the price. Just cause uproar in the charts. So one there. So basically, you're just looking for market structure break. Then it's your last down candle on a bullish order block, and on a bearish order block, it's your last up candle before a break. So let's just find a quick one, because there's a couple of ways how to do order blocks. Well, I've seen people trade them different ways. There's just say that full area will be your order block, but there's a lot of people I see trade them differently. A lot of different smart money people that I watch, they will only mark the open. A lot of people will only mark liquidity, and I think the reason that they do this is because they're getting a more confirmed entry. I know it doesn't know what happens to this one, but I think the reason they mark them like differently, it's just their way of trading, and I think that's how they want to that's what they want to see happen, something hit the liquidity, because that's all it's doing, is looking for liquidity. That's all the market will ever do, is try and find the liquidity to move. I think what you've got to take into consideration, markets weren't made for retail traders. They were made for bigger people. But we're here now, so Retail traders are here, so they're just going to use us to take our money. Simple as that. So basically, all order blocks is supply and demand. Basically, that's all they are. Supply and demand. Another version of supply and demand. So the reason why I mark both sides of liquidity and the body is because that is the actual area. If you're playing an area, you've got more chance of seeing what's going to happen in this area. So just go back. So what I was saying is a lot of people only use these two when they're trading order blocks. But you've got to take into consideration all the other blocks and the other patterns. Now I haven't got any of these on chart, but if you want to go over them, we will. So a breaker block and a mitigation block, people think they're the same, but they're not. A breaker block is where you get your breaker structure up. Obviously, your order block is created from your breaker structure to the upside. It goes up, it takes the liquidity from the last high, comes back down, and people wonder why this order block, if they were just trading it like this, and then the price did this, went straight through, they'd think, well, that's that order block out window. But actually, it's not. There've been a few times in chat where I've said, just keep that area in mind, because the reason you keep it in mind is because of these kind of patterns where you get this here, it breaks through the order block. So people then all of a sudden would think, oh, it's gone now, it's finished. That's a trade. But no, it carries on. Only thing is, with failed order blocks, you'll put them into the future because price tends to come back up, and it turns then from an order block to a breaker block. And all that breaker block means is it's a target, a potential target for it to bounce down from. Like obviously use it as a resistance then instead of a support, or instead of to pick your orders up. And then obviously it reprices lower. Now, a mitigation block is kind of the same thing, but it's an SFP. It's a swing failure pattern. Whereas it's self-explanatory, it fails to make a higher high, bounces back down, comes back to retest, and then goes in the right direction. Now, these obviously they'll never ever look exactly like this on chart. There's just wicks all over the place, the charts all over the place. But if you can see it, kind of, it's a good point. But these breaker blocks, these are the most common type, what you should be considering to trade if you failed your order block, or you should be looking for. Because the reason that I've put this breaker structure line into the future is because this is a Modo pattern. This happens pretty often. It fails a lot, but it happens pretty often. So here we are again. We've got the same pattern. We've got the breaker block pattern, exactly the same as drawn. So, second, let me just get a drink. So what happens is we take the liquidity. We have a breaker structure. We take the liquidity from this because that's all it's doing. The market will always try and look for liquidity. Like I say, they're not made for us, the markets. They were made in the first place for big players. They'll always be looking to grab liquidity like this. They'll always look, that's a high, that's a low. It grabs this liquidity and then comes back down. When it's grabbed something, it gives it the power to move back down. But this here, it's grabbed the liquidity, it's come down, the order blocks failed. Retail traders have lost all the stop losses. Not all retail traders, because obviously if people trade like this, they'll still be probably they'll know what's coming, or they'll open a short, or they could have opened a short up here if it's a bit more risky because you don't know exactly where the market's going to be or going to go. So this breaker block now has turned into, this order block, has turned into a breaker block. Price comes up, revisits it, smashes back down. Obviously, you can get a good trade off this, but when you're looking to, like, if you look back, just say this was 3 days worth of patterns, or just say a week's worth of patterns, which sometimes it will be. It's like this was, like, say last week, this is today. So you would always keep in mind this. I don't mark them all up like this. I just have that one mark there, and I know what it is. You always look left. Every time you load a chart, you look left, you see what's happened. You load your chart up here, what do you see? You see an order block, change to a breaker block, resistance, it's come back down. Somebody's got a decent trade off there. Retail traders have lost all the profit, or lost all the stop losses because they're just underneath this low. Come back, resistance, you've took a trade there, decent trade. Now, if I can do this now, if you were to see this breaker block happen, or this order block fail, and knew it was turning into a breaker block, or you're keeping an eye on what price does when it comes back to revisit it, it's not always going to be a breaker block. It'll just literally, you just have to see what price does when it comes to that certain point. So if you were to trade this, you've seen it like have a nice rejection inside, or you went down to a lower time frame, you've seen a market structure break to the down. You marked an order block up and it hit your order block inside this big breaker block on, like, just say your hourly chart, your 4 hourly chart. You always look left and look for your next structure. People target imbalances. They've got a very good place in smart money, but for me, I just trade literally structure. I have fair value gaps on my chart, but I mostly look for recent structure. So if you were to trade this, you'd look at your recent structure, you look at the liquidity in the recent structure, you'd look at the bodies in the recent structure, and you make your decision there where you want to take your profits from this trade here. But this is all still here, this Quasimodo, this breaker blocks, now it's happened, it's done. So now that's why we go straight through it. Finished, it's done, it's played out, it's done its part, it's played. So now you see equal lows, you've took your profit here, you see equal lows. This is the structure, this is just here, you took your profits, you've got a decent thing, but now you let price play out to see what your next potential trade could be. And you see some equal lows here, and you see it go up. When you see this next low form, if you want to load like a lower time frame chart up, you might be able to catch this trade straight up. But when you start coming back up here, sometimes when I trade, I'll trade from here down to here, then I won't trade for a while, or I might catch a little trade going up there, and then I won't trade after that until I see what happens. So obviously I think market might go back down because we're in overall bearish. Bullish, switch to bearish. So now when we come back up, this breaker block, when breaker blocks play out, most of the time, not all of the time, most of the time, this is what pattern you see straight after a breaker block. Well, not straight after, a few days after, you see, or just depends on your time frame really, you see a Quasimodo pattern play out. So you always want to keep in mind obviously your normal order blocks, but you always want to keep in mind your breaker blocks, because they're like a few patterns into one kind of thing. Mitigation block. Well, like I say, sorry, I didn't finish this one first. Yep. So the price comes back up. It comes to Quasimodo. It's not obviously always as clean as hitting that. Sometimes you do see it really cleanly, and that's the best time to trade, when you can see it clearly. You can't see it clearly, don't trade. Simple as that. So when it hits your Quasimodo location, we wait for the retest. You've got an order block here, or you've got a range here from your Quasimodo range. You've got a range. I can't think I can. You've got a little range for a Quasimodo. You wait for that Quasimodo to get hit. Sometimes it goes all the way down, but sometimes, most of the time, you'll always get some kind of little tiny retest or something like that for it then to go in the direction it wanted. But all the way through this position, people are going long from here, they're going long here, they're going long here, because they see from the start of this kind of structure, they see bullish. That's all they see, bullish. So then that's where like people are staying right up to here. A lot of people, a lot of smart money people will take their profits out up here, just under. So, and then a mitigation block. It's not the same as a breaker block. It's literally, it's a swing failure pattern. This is obviously taking liquidity. This carries on going. It does another breaker structure and then comes down, breaks your structure back to the downside from a bullish pattern. Mitigation is from a bullish or a bearish pattern. You can have these both ways. Obviously, it's just a swing failure pattern. And then this turns into a mitigation block, bounces through, breaker structure to the down. Didn't make a higher high, gone back down. Boom. So when it comes back down here, people will think, it's just a bit of noise. It's actually not. It's something to, you have to keep your eye on stuff like this. Because if you're just looking at bullish order blocks and bearish order blocks, you're missing out. QMLs, you're missing out on breakers, mitigations, you're missing out on quite a lot that you should really be, if you want to trade order blocks or you are trading order blocks, you should also be looking at other patterns. I mean, there's a lot of patterns you could use other than this, but I think these are the easiest to spot and the simplest. So basically, when you get any order block that fails to the up, to the down, always, even if you just keep it there and just say it fails there, always keep it on your chart, because in the future when prices come here, and then comes back up, pull that to the front and it can bounce straight back off of it. So right, next bit. What I don't know what to do first. Let's leave that pattern for now. In fact, I'll do it. Right, so compression. I can show you a couple of examples of compression. Well, we'll probably not be able to find one now. But compression is exactly how it is. It's like, well, don't get it mixed up with consolidation. Consolidation is just this, it's sideways. And that's just taking everyone's money. Compression is making higher highs and higher lows in a compressed manner. If you think about like this as a spring, if you push this spring all together, you're in with both palms of your hand from top to bottom, it's wanting to push out. So what you do when you see compression in the market, you can have compression down, lower lows, lower highs, lower lows, lower highs. A lot of the time, when you see compression, it is a bit like a flag pattern, this, but it's compression. That's what it's called. So when you see compression and you're worrying about, you've marked your chart up with, I'm trying to find an example here, just quickly. They're everywhere on every time frame. Some of them are easy to spot, some of them aren't. Is kind of compression. It's not the clearest of compressions, but it is kind of a compression. You're making, this is not the clearest, you're making And then when you get to the bottom, or when you're going to break out, you're always looking for where your targets are going to be. Like I say, this is not the perfect example, but at the end of every compression, you'll always get a big move up, a big bounce off of it. Most of the time, when when you're looking for something, when you don't need it and you see it all the time, and then when you're looking for it, trying to find the cleanest example I can show you. Here's one, look. Perfect. Moving up in a compressed fashion. Some of them are different to others. So when compression happens, just say the market was here. What happens when you see some kind of little compression like that? I mean, once you see them, you can't. They're pretty easy to spot. And I don't know. This is what I use to know that if an order block's gonna be good or not. So yeah. So you see, see a break to the down. Yeah. Cleanest. See a better break here. Highest. See, you've got two breaks here. You've got two breaks here. One's cleaner than the other. I like to see a cleaner break. So when you come down, you've got a break already. So now you've got this order block marked out. You had this order block marked out here because you've seen this break. You've marked this order block out up here. So then you get compression going up. So what you do when you see this compression is you look left first, all the time. Every time, if you see any kind of compression, and you'll see them all the time. Once you've heard, you'll see them all the time. So what you do is when you're seeing it going up like this, and you think it's going to fly straight up, sometimes it does fly straight up. When it comes to the end of it and it breaks out, it does fly up. But most of the time you're looking left because you want to see what's happened before. You want to see targets, where it's going to compress to, where it's going to go, where the compression is going to end. Because at the end of most compressions, you get a big bounce to the up or to the down. So when you look left on here, this is what you see, a break here and a break here. You mark your order block out and you pull it across because you're down here watching this compression happen. And this order block then, you can see it as a potential target because you think, right, I'm compressing up to this target and I know this order block may have orders there. It may have something waiting there for us to trade off of. So this compression, what's here now, might end when it gets to this order block. Always look for your targets and then look what happens. You have a compression, it hits an order block and boom. Some of them, you don't get moves as big as that. And I'm pretty sure I had a trade around this area somewhere. I think that was a big news. And in fact, I think I traded that one. But you'll never go wrong trading off of a compression. I don't think anyway. You will go wrong. Obviously, you can always go wrong, but compressions are very, very good patterns to trade off of. And they're just the kind of the same as flags. They're kind of the same as flags. Not always, but kind of. If you look, try and draw a flag here. See what I mean? It's like a bit like a bearish flag, that one. They're not bearish flags. People would trade it like a bearish flag, but it's not. So, but yeah, all in all, order blocks is a good strategy if you're using other things, other patterns. But order blocks works better in conjunction with another strategy like support and resistance, patterns. It works like your triangles. We're waiting for something to break out of a triangle. There's an order block near the top of the bearish order block near the top of triangle. It breaks to it and then bounces back down. Order blocks are really, really good, and they compensate other strategies really well. Whereas I normally mark a really high time frame chart out with my patterns and stuff like that. I have like a million and one indicators here with all different like patterns on it. So I can't wait for David to make the pattern indicator, so I can just have it as one thing.
It's on its way.
Also,
on its way.
Yeah, also works. It also works. Order blocks works very well with vectors, and I think I've got this. Yeah, this is your new strategy. What you've made, David, and it works. It works. Well, I was saying last night. It works pretty well with your new strategy. The another ABC. It works pretty good with that. Like I say, it works well with. So now we've gone over the patterns of what I use and what I do. Now, how do I find highest probability order blocks? Sorry, I'm just going to mute my mic while I get a quick drink. So, I have about, I don't know, I think I have 4 different ways to trade order blocks. And this is just like one kind of way that I trade them. I've got like a strat that uses indicators. Try not to use indicators for order blocks because I want to do it. I want to get really good with all these patterns. I mean, there's loads and loads of patterns. I sent you a list in, David, of all the patterns and stuff that people use. But I have like 3 different ways I trade order blocks. But I think the best I can do for this one is the ones that are the highest probability is the ones that are coming from. Everyone says your higher time frames are your better. Yeah, they are. Yeah, but when you're looking at the higher time frame for order blocks, well, for any kind of smart money, the best thing to do is just zoom out. Get a trend line, just put it at the top of the price or at the bottom of the price, and then if you're down, the bearish order blocks obviously are going to be the ones with most weight. And even if you drop down, just say you find an area what's potentially like had a break of structure. We're on 4 hour now, so this is like kind of a example. Obviously, I'm not going to go into the lower time frame because I'm just trying to show you what I'm trying to explain. So just say this is the reason why. This is the perfect reason why I say you look on the higher time frame just to find where you are, just to find the order flow in the market, just to find what the big players want the market to do. You can do that by a trend line. I've got this on here. You can do it by the EMAs. You see dips. You see it coming from the top there down. Consolidation, pump up, fill this gap in the market. Fill the gap in the market, imbalance, comes back down into the natural direction where it started to come from. If you're going to trade anything up, what's bullish? If you're going to go bullish on when your order flow's bearish, make sure to always have your eye on your trade if it's manual, or always put a target in, a take profit that is very, very realistic. Not, we've got to break a structure here, so next time it's here, I'm going to set this order block off and I'm aiming up here because you're bearish. There's more chance of platting fog. If you're in a bearish order flow, there's more chance of platting fog that you're going to catch this bullish up, change of character, and you're going to carry it right up to the top. You're bearish from a long time ago. So until you see otherwise, then just if you are going to take longs in a bearish order flow, make sure it's a scalp, or make sure you have your realistic target set. For me, if I was going to trade off of anything here, just say I had a trade up here, I would literally trade. What's going on here? I would literally trade for that, or I'd trade for the next structure or below the structure, because you've got more chance of hitting that than coming back up to it, this structure, or coming back to take this liquidity, or coming up here to do this. It's that simple. But yeah, like I say, you had a break here, break a structure here. People will be thinking, right, it's come all the way down here, a little break here. You've marked another block out. But when you're on the higher time frame, you can mark range. But where am I here? But yeah, you've marked this out. People will see this. Well, we've had a massive downtrend. We've had a breaker structure here, and it happened the other day in general chat. Someone sent a photo into general chat and said, "What do you think?" And I said the exact same thing. Look, don't count it as something major. But this one lower time frame is I said don't count it as major, because look where we've come from. I've said it a few times to people. Look where you come from. Simple as that. Look where you come from, and then that'll give you most of the answers you need. So, and that's why lately I've been waiting for trades to come and do stuff like this. Come to there. That's your lower high. I've waited for him to come back down, and I've waited for him to come back up here to start trading, because I know that's where you're going to get the highest probability when you're hitting the highest high of the downtrend. That's where you're going to get your highest probability, best trade, sorry. But if you see come all the way down like that, a lot of retail traders, when they see this, if you put this on a lower time frame, let me just take these EMAs on, because this does my head in with all this stuff on my chart. It even does my head in with all these blocks on. But when you see people see this, retail traders, we've come from this massive bull. We've come from this. Sorry, this is a bit thingy. We've come from this. And this is what a lot of people, like, I won't say a lot of people, because people who've got half a brain cell would wouldn't know what's going on. But people would think you've come from this. That's just a setback. So what people would be thinking is, and sometimes the way they're thinking, it doesn't work. But the way, just say you did this. So this is from like if you're on your higher time frame and you mark your full structure out with your fib. This is your 50%. So a lot of people would think, some people, would I say, some people who don't really take into consideration where you actually are in the market. A lot of people would think, right, well, that's just that. Next, that we've seen this break of structure here. After it's returned, it's had a retracement from the full structure, has had a retracement all the way back to the 50. Well, it's had a retracement back to the equilibrium from this full uptrend. So now people would see like the breaker structure, and they'd think they can get in a trade and they can target this and this. They think they can target right up here because they think overall we're doing this, but it's not how it works. I don't think that's not how I trade it. When you zoom out even more, look how much we've got equal highs here. To me, these little structures, there will be something on smaller time frames, but if you take into consideration the higher time frame bias where you are, these here are the main. If you zoom out, these are the main areas to look at, where you can see where all the high volume is. Even just zooming out, the more clutter you've got in one area, that's where your high volume is. That's where you want to be looking at. That's the range you want to be trading at. That's the range you want to be trading off, or range you want to be trading in, should I say. But overall, if you just zoom out, you see all your major areas, what you want to be trading from. The more you zoom in, I think the more headache you're going to get, the more stress you're going to get. And I know this is on the 4 hour, but I have got stuff I use on the 30-minute and the 15-minute. But I'm just showing what. So let me just load it in. Sorry about this, guys. I'm not very. So that leads to the next, your order flow, your high time frame bias. What you want to take into consideration when you're trading, when you first want to trade your order blocks and you want to be successful with your order blocks, just delete this because it's in the way, is your order flow. If you get your order flow right, you only want to take trades and order blocks in the same direction as your order flow. So there's two differences. There's order flow, which is your high time frame biased, and then there's your green, your trend. Two different things, but you see a lot more noise in your trend than you do your order flow. A lot more. So let's go back here. Oh wow, that's gone weird. So That's your order flow for that part. Order flow for that part. So in this area, you're still seeing, because it's the high time frame, when you see people see pumps like this and it breaks that, or this getting broke, they think, yeah, we're back bullish. It's not. When you go into just say, when you go into a 30-minute chart, you will not think that you're bearish. You'll think in certain cases this will look massive. That will look absolutely massive. 30-minute or 15-minute chart. So always look for this. So zooming into this. So back to this area here. 4-hour chart. The order flows up. You failed here to make a high, or you failed to take that liquidity from up there. So now this is now you're in a bearish order flow. From that bullish order flow, you're in a bearish order flow because you failed to make to crack that high. That's how you find the order flow on a high time frame. So what happens then when you fail? Let me just take this higher low chart as well off. So what happens when you fail to make the higher high? Fail to break that. Then what you want to be looking at then is obviously your order block's bearish. You're failing to make a higher, or you're failing to make you fail to make a lower here. That's the fail. That's the fail. That's what you forget. That's what you don't crack. So now you're switching here. So then what you do then is, right, we've failed to make a new low from this bearish order flow. So now I want to be looking for buys. So what you do then is you look left at, and you might want to go down time frames when you're doing it. But you look left at what you're going to take, like liquidity wise. And areas where something's happened. That's where you want to be targeting as soon as your order flow changes. Just for your bigger things. I mean, a lot of people won't target for big uptrends like this. They'll just target and take, I don't know, they'll just target like this and take this up to here. They'll take that. There's nothing wrong with that. It's still a win. It's, you know, it's still a win. But always look left. Look at your areas of consolidation. Look at your areas of high volume. Look at your areas for liquidity. All that sort of stuff. And then when you get to a point, you would have collected. If you had a trade coming from here, you would have collected at this structure anyway. You want to let it. You want if you want to 40, we're going to go all the way up. So then you fail here. you fail here to take this high. So now your order flow is bearish. So now you know your bearish order blocks are going to give you the biggest returns, and they're going to be the safest. They're going to be the safest option to take, other than your scalps. You can, like I say, you can scalp on this and you can get perfect gains. But the more prone to fail order blocks when your order flow is bearish. So always trade order blocks in the same direction as your order flow. Right. Next bit. I don't know where I'm at now. I just go away with myself with talking. I got 1 second. Let me just. What do I want? Have it is somewhere. Am I which screen have I got on here? Can't remember which screen I've got on here.
Which screen? What do you mean? We can.
Oh, it's all right. I've got it. I found it. Yeah, I forgot which screen I had on. Right. I'm just trying to find out where I am here because I've got myself a bit lost here. A second. So. Can you see BTC now? Is it flicked on its own, or?
Yep, we can see BTC. Yeah, USD.
Right. What? So that flicks now, does it?
We can see currently your 1, 2, 3, 4th tab. You went over to Ethereum, and then you're back to BTC.
All right. Yeah. Right. So this one is. Sure, I had my XRP on. 1 second. I'm down here. Here's the trade I went. Here's the trade I took. The day. Ended up with.
Might be me. Yeah, that's right. We can find now. Go on. Sorry.
What's that? Go on. What did you say?
No, I thought you were talking, and I thought your mic. I couldn't hear you, but it was my fault. Sorry for Scope. Carry on, please.
Yeah. Right. So I just want to go over this trade here. What I did the other day. This was XRP. I think it went up to 200. I think I got out. Probably. I got out here when the price come back up. So I went out for a day and I moved my stop loss. But I was thinking to get this liquidity. But so what I seen on the other day is I seen someone putting trades in of XRP, and they were all longs, and I seen a few longs one after the other over like a course of a few days. So every time I see something like that, it makes me think the opposite. It makes me think, yeah, short. there's been like a few days of flat out taking profits and big numbers going up. So obviously something's got to give here. So what I did was I went onto the chart, and it was around here somewhere, the chart, when I loaded it up. And sorry, I just actually, my dog's messing about. Yeah, so I think I loaded the chart up around here somewhere, and obviously I seen this fail here, and I wanted to get in that trade. So, but we didn't cause another break here, and I marked it out. We didn't cause another break. We didn't cause a breakdown. We had like a breakdown here, but it's not. It won't. I don't know how to put it. It won't clear. I wanted something to break this, because that's the one move that I wanted to break. So I think we didn't break it here, but I still I had this marked. I had this marked. But we carried on. We carried on going up. I mean, we missed here. We missed to make a higher on everyone. So I knew we was going to go down. But I missed this actual trade to get in here. I had this planned out to get in here, because I thought we had, when I watched it, and I thought, and I did exactly the same when I got into the trade here, exactly the same thought and everything. We had this here. We had this here in an order block. So I thought, right, it's going down. We've failed to make a new high. So now, what is the price naturally going to do? The price is naturally going to go and try and get the next structure or the next pieces of liquidity. I don't use fair value gaps very often, because a lot of times they do work, but for me, structure, I mean, as you can see, that you've got this swing failure pattern here, but you've got this structure. Now, the price to me is easily going to hit structure before it hits any of them two order blocks. That's why I choose to just use structure. So my dog is going crazy. But now is, I missed this trade. I knew we were going to come back up to test this order block, because we've had this. This is obviously a weakness in the trend. We've I think it was up something like, I don't know, when I checked it was something like 10% up or something, and that's what I if you look on here on my watch list, when I load my charts up, I look on the right hand side, that, and I always show the one that has lost the most or the one that has gained the most, and then that's what I look at for potential trades. So I think this was up something like 10%. I didn't put a limit order in here. I normally put limit order in here, but because when I'm on a higher time frame, I think the stop losses for me just I think they're just massive. And when you're using leverage, people might not think that that's a big stop loss, but to me that's a killer stop loss. That 1.83, and you've got times, even if you've got times 10 or times 20, it's killer stop loss. And most of the time I'll use times 20 or times 25. BTC, I use, I think I use a tiny bit more because it's easier to, it's price is that high, you can do it. It's that expensive, should I say? So I missed this trade and I was gutted, but then I noticed we were coming to this this line that I put in, this trend line. Obviously, it's where it started from. I put it in here. Obviously, used it as a support going all the way up, but then we got miles away from it up here. So, and then we got this swing failure pattern. So I thought we're definitely going down. Missed this trade, so I thought, well, there's no point trying to get in anywhere else. I'm gonna have to wait till it plays out. So then when we broke it, I didn't want to even get in there because I wanted to wait, like a lot of people do. They wait for a retest of the trend line. But as you see, we didn't get a retest for quite some time. So I think I waited, all in all, I waited quite a long time for it, for a retest, a couple of days. And when it come back up, it touched it. I didn't even get in there. I waited for the exact same setup as I was going to enter on the first time. I waited for that. If I would have got in that, it would have been way better trade. I mean, and that's the thing with manual. I mean, look at that. I think that's the thing with manual trading. You miss so much opportunities when you could have had. Look at that trade is mega. And I think, to be fair, I think I would have seen it bounce off of here once. I think I would have given it another chance. I think I would have collected here anyway, so I wouldn't have got that full move, but you can kind of see what I'm saying. So then what happened here, when it came back up to test, I was expecting it to go right down and then test back up and then come down, but it just took ages to do. So what I did then was, when it retested up here, and it retested it perfectly, and obviously I marked these out as well, this and this, because I thought price could wick right up into here and then come down. So that's why I waited for a while for it to happen. So then what I did here, I waited for this here, and then I waited for the swing failure again. It failed to take that liquidity. So then what happens when it doesn't take liquidity from the top? It'll always, in an uptrend, it always takes the liquidity. Always, say BC, always takes liquidity. Every time it goes past, it's take liquidity, took liquidity, that gives it the power to go down and come back up. Took liquidity, that gives it the power to come back up. So once you fail to take that liquidity, the next liquidity you're going to take is these, or anything left down here. Obviously, because you get your swing failure pattern, the only logical explanation is you are coming down definitely to take liquidity, or from most of these, or from like just say this is a decent sized thing like that, a swing like that. You're coming down to take this no matter what. You can always target something like this, always. So we did the exact same thing again. We had a swing failure pattern. There was the low. We come back up. It didn't do anything. It left liquidity there. It left liquidity here before it moved. Just put this in. Oh my God. So we failed to take this liquidity from here. So, and we caused liquidity here. So I think this is marked out as an actual block, I'm sure. Yeah, it is. It might be on a lower, I don't know. But we had liquidity here. I marked it out. We had liquidity here. So I was waiting for price to come back up to take that liquidity to then move down, because obviously we've had the swing failure pattern play out. So the next step is it's going to come back up to take the liquidity, because if it was going to go up, it would have gone up from here. It would have gone straight up from here. It didn't. So the next thing that's going to happen, it's going to come down, and then it's going to take target liquidity. Sometimes it could have just take this first bit of liquidity and go down. That might be enough, but it'll always target liquidity. That's all the market is ever trying to do. The liquidity is where every single retail trader's stop losses are. Simple as that. and that's how I do it. So when it's come back up here, big massive candle, when it's come back up here, I waited again for this liquidity to be touched. It's took this liquidity, it's took this liquidity, but left liquidity on its own. So I waited for it to come back up again, retest again, and it tested it, and I got straight into there. Now, these other lines here, these were the targets, these were liquidity to the down, what the market had left by going up to take the top liquidity. So when it's gone up and it's took top liquidity, now you're in bearish, because you've got your swing failure pattern. So now you're bearish. So the next thing it's going to do is take the liquidity, the resting liquidity, to then go in the right direction, to its intended direction. So when it's come here, I've jumped straight into the trade. The trade is in my my Discord page. I just marked out, these lines are all the way over here. I just marked out the liquidity it was going to take, and that's it. I was happy. I think when I left it in the middle of the night, and I left my stop loss here, because I think I did. What did I do now? Yeah, I left my stop loss here because I thought it's not too much further to take liquidity. It were here somewhere, and I went to bed, or somewhere around here, and it just carried on going. So I got up to when it's took this liquidity, I was happy for my position. I would have left a stop loss there and let it run, and then just checked it every now and again. But I went out to work in that day. I had this marked out. I had this order block marked out here. And instead of setting that as a take profit when I went out the top of that or just before it, I didn't set any target, and I ended up cashing out somewhere. I think it broke structure. I think I ended up out somewhere around here because I seen it bounce all the way down to that, and I seen it bounce off of this order block, and I thought, well, that's got some weight behind it, that order block, because look at the move that come from it. That's a high probability order block. Look at the size, look how much come from it. Look at the volume inside these candles. It just flew straight up. There's not even a black candle, there's not even a bearish candle all the way until it gets up there. So it went down to here. When it got to here, it was at like 290%, and I didn't even. This box was still there. I just leave them there, because normally when I look on my screen, I can see that, because I can see my screen. But when you load your phone up, you see that much. So I changed my stop loss to up here. So I think it was here on a lower time frame, and it hit it. I ended up with 200%. But that is exactly how I saw that trade. Swing failure pattern. Liquidity. Took the trade. We moved to bearish. Failed. Moved to bearish. Waited for the retest. Waited for the liquidity to be taken. And then we followed straight off. Bounced straight off. I think there was one on Ethereum that I was looking at. This one today, I had this one. I put this one on last night. I was aiming further down. I got stopped out at break even. My other trades, I'm still in. I'm still in Bitcoin at the minute. Yeah, Bitcoin I'm still in at the minute, even though we are pushing up. We're on the 15-minute. If we go, sorry guys. BTC for me, we're still bearish. Well, we're not still bearish, because obviously we've bounced up there, but We are now bearish because we've not bounced back past this. I think we're on the verge of moving back up. I have got a short open. My short is, let me just have a look. My short was open at, I have an actual page open for this, so I'll just find it. I do. Yeah. Let me just turn these off because this is like another strat. I've got an order block, find a strat. I'm trying to make that up. Get it loaded up. This is the trade I'm in. I always put this target in. That's not my take profit target. What's wrote into my thing. I just always put that in. But I still think on this we're bearish. I know we've had a big bounce up, but I'm still literally 50% in profit on it. So I'm staying in because we've left liquidity there. We failed to break that high. Sorry guys, I'm not very good on this. I don't know whether it's my mouse or it's me. We've got equal highs here. We've not absolutely smashed past that. And if we break straight through that, as I was saying yesterday, I think 25.20. I don't know there, that's the reason 25.20. The reason I think 25.20 is because that is the highest point. That is the highest point in this since we've been in this massive, after this massive bearish trend, that is the highest point. So I think for me, 25.20 is key level to break. We need to smash straight through it. This line here, what I've put on the grey line, that is a massive resistance. And as I was saying, order blocks work better when you're playing with resistance and patterns and stuff like that. So I think the thing is we need to break this resistance and we need to break that, take liquidity from there. What I use for liquidity is higher time frames. I use the 4 hours and I use the daily liquidity. See, I know my chart might look a bit messy, but if I zoom in, it looks a bit better. So what I always look for in here is, I'm in this trade now. We've got this liquidity and your indicator, David. Your indicator it pointed this out because I drew this last night. Well, I drew this line ages ago, but put this in Discord yesterday, and your indicator like come around here saying it's going to reverse here. So we've got the equal highs here. This one's come up. It's not absolutely broke it. Obviously, liquidity is broke it. It would have lower time frame. You'd certainly have bars above it, but for me, we've not broke this. This massive resistance, and it's been resistance for quite some time now. How many times it's been hit? As soon as we break that, 25. If we break that and 25.20, I'll wait till it goes up past 25.20, way past 25.20. I want to see a massive like break of 25.20, and then a retest of it, and then I'd think about aiming for these. The gold bars are my daily liquidity to aim for, and the purple is my 4 hourly. I find, unless I'm sat at my charts, I find these to be the best levels. And also, if you fail in order blocks, if you fail to take liquidity from the top, well, not in just order blocks, in general, in smart money, if you're failing to take the liquidity from the top, you're always gonna be taking liquidity from the bottom. Always. You have to. The market has to take liquidity. That's what it's doing. That's all it's there for, to take liquidity. So you can see here. I'm just gonna minimize this kind of thing because we do made.
So what was the name of that indicator that you're using? Just
higher time frame liquidity, but you can have all sorts. You can have the weekly, the monthly, the intraday, the 1 hour. But I literally just have, and you can have the ones that are grey.
Yeah.
You know, dashed. They are already mitigated. So
okay.
So I load this. I mean, you can see it without, but like, if you just have it quickly loaded on a chart, you can see your liquidity. What's there, what's been taken. So obviously, this purple line, this is new liquidity. So this purple line shows that there's new liquidity in this level, and it's down to take it. You know what I mean? So
that's brilliant.
Yeah, you can see it all the time. But so all the market is trying to do is grab liquidity. That's all it's trying to do. Right. If you don't take the high liquidity, you're going to target the low liquidity, and that's exactly how I got in this trade. We come down. I'm sick to death of this bounce. It doesn't do your head in when it flicks on and off all the time. That does my absolute nutting.
I know.
Just move that. So the reason I got in this trade is because we had an equal high. We failed to break that equal high. We were coming up to a resistance. I actually wrote in the chart, in the Discord last night, I were on about getting Mr. BTC in headlock and monkey scrubbing him. So I wrote this last night, exactly why I jumped in and everything. This key resistance here, 25-20 line. If we're not breaking that 25-20 line, I don't want to know. I'm shorting. We came back up. This confirmed more for me to stay in the trade. We didn't take any liquidity from the top. So what happens then? The next liquidity I'm looking for is these down candles here, because obviously we're on the hourly. If you go down to a lower time frame, that'll be a full swing. So I'm waiting for that liquidity to be taken. Potentially waiting for that. I mean, we've done the same kind of thing here. We've took the liquidity, but we're bearish. So what makes me stay in trades like this, even though, I mean, what is it? It's 48% up at a minute. I've obviously moved my my entry point. My entry point was 23 somewhere. We've obviously we're bearish here. We've failed to. You know what? I'm just going to delete this.
Do you enter manually, Scoops, or do you?
Yeah, I enter manually every time. Yeah. So we've failed to break it here. I said last night when we were here, I actually put it in into Discord. I put when we were here somewhere, and I marked this out, this gold area out, and I had all this marked out, and I said keep an eye on this area because this is where we're going to fall down. And last night, in fact, let me just, this is out. This is what I see. Sorry, I forgot to put these on. I have a regular MACD. Okay. Take the lines off it. I use literally, I use literally no signal line, no MACD. I put all the up ones in one color, all the down ones in one color. So I ain't got none of this. Oh look, it's where people think, oh look, it's dropping down here. If this were a normal MACD, that would be lighter shaded. So people be like, right, I'm shorting from here. You know, like just they'll look at RSI. They'll see RSI up here. That's at 70 level, so that's oversold. And then they'll see a normal MACD coming down like that. You probably have your signal line and your MACD line crossing because this is started to go down. So people would short, but I don't use, people say MACD's crap. I don't use MACD like everybody else does. You can see it's completely different and it tells a completely different story, this MACD. So for me, what's good for me using it like this is like Johnny was saying in his ABC live the other day. He obviously didn't look at MACDs and that, but he was saying like, and this is what I do, like this, he sees that as one move, and so do I. My MACD shows that as one big move. Simple, one big move. All these little bits, on lower time frames there will be something, but it's just noise. It's just more things for me to take into consideration, and for me to give myself more risk of getting into more trades, if you know what I mean. If I'm seeing all this, I'm going to think, oh, that's going short. This is why I use the MACD like this. And I use this just normal RSI with divergences. That's all I use.
Simple.
Yeah, it's just literally being the same color. It helps so much because you're cancelling all this noise out, and sometimes you still get your bits of noise. But if there's not more than two candles in the opposite way, I don't count it as anything. Do you know what I mean? Like, I don't count that. That's them two blacks there. They're bearish. Look at this chart. The chart is not bearish. You know what I mean? It's going up. So that's why I don't count anything less than that, and I use them. And it works well for scalping on low time frames. This MACD setup as well. Not the divergence, but this, because divergence doesn't always play out, I don't think, on lower time frames. And you get too many signals. But yeah, the MACD, exactly like that. That's how I use it. So last night, what I saw, and I mentioned it here, I put it in the group. I said, right, every time frame while we was here last night was oversold. Every single time frame, except the daily. Then we were coming up to this resistance. Then I had this 25-20 in my mind. Then I had this equal high in my mind. Then I had oversold on every single time frame. Look, we were oversold on every single time frame. Every one, 30 minutes. Look how much we were oversold. Every single one was at this area. Obviously, this started to move down. I think I got in just underneath this. I think I got in just underneath here. I got in at 23.43. I think 23.43. I got in somewhere. I can't remember. I think I waited for this little retest or something, and I got in there. Because every single time frame, everything were oversold. The MACD was coming down. That was like the leg. The MACD was coming down. Resistance 25-20. Failed to break it. Failed to break this high when really we've been in a bullish trend. We should have. From this high, we had this gold. It's some sort of order block on a different time frame that I've put across. This is also an order block, but on a different time frame, and I actually traded this. And that's another trade I won a couple of days ago. But normally, what you normally see is when you see formations like this with order blocks, is you normally see this big pump up. You normally see the big pump up, then you'll see you can get in along from here. I mean, that's another resistance line there, but you can get in along from here and you can get good things, but you can get really high profits. But I think for me now, I think I'd rather, we're being busy in that, I'd rather just wait for these high probability setups to come into play. I mean, I literally played that one. That's in my my setups thing. This one's I put in Discord last night for the exact same reason. But I think for me, trading smart money and order blocks, I think for me it's more of I know people use indicators for confluence and that. I've got 2 indicators here. Yeah, I've got 2 indicators for confluence. But I think when you're trading anything really in general, the more confluence you can find to take that trade or to have confidence in that trade, the better. I mean, I forget his name now. I used to watch a guy. I think it was probably about 6 months ago. I started watching. Well, I watched a few of his videos and I binged, like, I don't know, a little playlist he had. And he won't jump into a trade unless he can find 7 confluences for reasons to be in the trade. For me, I use these 2, but I think you can get enough confluence just off your chart. You know, just by looking at your chart, you can get enough confluence. I know people think order blocks is simple, but there's just so much more to it. Like I showed you all them patterns, QML. There's all sorts. Like this here. This is a QML pattern, kind of. But people don't see it like that. This is a QML pattern. Look. Up, bounce, cross. QML pattern. You don't see people like it's just confluence for me. So for me for this trade specifically, my confluence was every time frame oversold, MACD on a leg coming down, equal highs, resistance, not broke 25.20, not smashed through previous highs, and this pattern here, a little failed, it come down, it failed to take it, it failed to take the liquidity from it, and then the next target is going to be next liquidity. Bang, there you go. This is the next liquidity it's going to take. Straight down to it. And I believe I'm still in the trade because I believe it's going to come down even more. But whereas when you get their fear and greed, I think it is, and you'll get people scared because it's gone back up. Like this went up. My stop loss is on my entry now. So my entry is literally on my crosshair. There, exactly there, my stop loss is there. I won't bothered about that stop loss getting hit. A lot of people will see that going up and they'll start cashing out here, or they'll start cashing out. They'll cash out here because it's gone back above this high. To me, I just left it running because I just think we've took that liquidity, but we've got more places to go than that. We could go up, but for me, we've not broke this resistance, and this has been massive. And look, every time we've hit it, we've absolutely hammered. Every time we've hit it, we've hammered. Do you know what I mean? It's like, for me, that gives me confidence to stay in that them kind of trades. I mean, it might not end up nothing, but to me, my stop loss is at break even. It don't matter. I'm not bothered. But I feel we've come back up. We've just took this bit of liquidity. We've got another order block here It's come up, it's touched that order block perfectly, and it's come back down again. So we've had the reaction. What a lot of people do, here's an example, 2 taps of an order block, and they'll not use it. 2 taps of an order block, they'll not use it. So this is how I see it. I've probably got, I don't know, to get into that trade, I've probably had, if you count all the time frames, I've probably got about 12 confluences, 12, 13 confluences to get into that trade, to stay in that trade, and to keep going in that trade. That's just how I see it. Like I say, it's just, it's always going to target liquidity. And that's just the ins and outs of it. Smart money is called smart money because you've got to use your brain. You've got to be smart, not be thick, and not be scared. Just have a bit of faith in your trades. If they don't work out, your stop losses in place for your trades, just in case they don't work out. But if you think every time I see somebody put a trade in, or every time I see somebody look at this chart, what do you reckon to this? And it might look good, but when you zoom out, you look where prices come from, you look where it is, you go to your 4-hour chart, you see what your bias is. Your bias is negative, completely negative. Every time I see a chart, or every time I look at a chart, this is what I do, is zoom out, my bias is negative, and people put longs in. You can get, when you're on a high time frame, obviously even the littlest a move, you can get a big move, a good move. But for me, I'll just look at order flow, and I'll take most of my positions will be, if I'm not sat in front, if it's not weekend and I'm not sat in front of a chart, and I ain't got the time to literally sit and trade and sit and look at all my coins or whatever, I'll just trade literally the way it looks, the way I see it. So when I see people putting this long in, if I ain't made it, I'm not interested, because order flow's bearish anyway. So I know they might get one win, but I know I've got more chance my setups working, because the probability of a bearish order block working in bearish order flow is tenfold compared to a bullish order block, bearish order flow. See, your order flow is down. This is just your trend. That's just your trend. That's just working up to get in line with your order flow. See, when people are saying, look at this long, yeah, but make sure you collect it, because we're bearish. The overall outcome is bearish. Whether you think you're making millions, or whether you know what I mean, even if you're pulling longs off, you're bearish. Simple as that. The only thing that's happening is this trend is going up, and it looks bullish because it's trying to get in line with overall order flow. And then when you're in line with overall order flow, that's when your best trades are going to go. Simple as that. Your best trades will come when all your order blocks are in line with your order flow, and your trend has come up to meet your order flow, then to go back down in the same direction as your order flow. That's how your best probability setups are coming. That's how your best probability order blocks are coming. That's how your best probability anything's coming. Simple as that. So
You explain trading like it's child play for you, but it's very clear how you trade. One question actually, because you don't take partial profits, so in the in these zones. But how do you your stop loss into break even? Do you take a small piece of your position?
I used to. Do you know what got me into multiple take profits? Is using David's indicators. That's what got me into using multiple take profits, because well, it was an option, and I did it. But you know, like when I'm manual trading, I will very, very, very rarely. Well, I would never ever set multiple take profits. These lines, what I set up on trades, these lines, what I set up, they're not multiple take profits. If I showed somebody that setup, I know it looks a bit. Let me try and find a different one for you, because that's not very clear. Oh yeah, there we go. Look, there's a perfect one. I got stopped out of this one, by the way. No, not this one. I had money on this one. I think that's where I took my money out of that one. This one I got stopped out today. It's the same one as BTC. It's the same trade I'm in now as BTC. Look how much it took me out by. Tiniest amount. If I showed someone this setup, these lines here, like I say, market is always just going to look for liquidity. Think about someone's got to lose in order for you to win. It's always going to claim liquidity in order for them to win. Simple as that. It's going to go down, claim liquidity, take everybody's stop losses because they're long, because they've seen this go up. So they're moving the stop losses. Let me just lower time frame for you, because it's all right. I see things on these high time frames, like these little like wicks and stuff like that. I like kind of read stuff off of them. Whereas when you're on 1 hours and you're 30 minutes, you can see things better. So if I send this chart to someone, they could, if I put this in the group, they could literally say, all right, this is what Scopes has said is going to happen, or this is the trade I might consider. This is what Scopes has put in Scopes' setups. They could see these lines and they could do multiple take profits. For me, they're not multiple take profits. For me, they are just targets. Their liquidity, the targets, the points of interest, or there's something that I'm looking for to see what price does when it gets there. And I'll show you an example of that. I think it's this one. Yeah, it's this one. It's this Ethereum trade. For me, these are points of interest. Oh, this is people can use these as multiple take profits, and there you go, perfectly. They would have got first take profit, they would have got it. Second take profit, they would have got it. Third take profit, they wouldn't have hit it. I'm not going to sit there and say, well, you could have just waited till it hit this close and that. I'm not. I drew it. That's what I thought were going to happen. That's what I thought could have happened. I drew it, and that's that. That's what I was waiting for, that there. But obviously, because when I go out, I'll move my stop losses. I'll move my stop loss into profit if I go out, because I go out working on the day. I run a business, so I have to, you know, I'm not bothered if I lose it, because look how much my stop losses are. It's 0.47. The potential gain would have been 10%. So you know, I'm not losing this one here. I lost 0.4%. Potential gain would have been 6%, just under 6%. And it still could go down now, because we've came up, we've took liquidity, we've grabbed this liquidity, but my stop loss was 0.41. Imagine if I put it like normal people do at 1% there, above this liquidity, I'd still be in that trade. I would have been in a minus I would have been in red for a bit, but then it started coming back down. BTC has done the exact same as this trade did Ethereum. It's gone all the way down. I showed you BTC a minute ago. It's come all the way back up. It's not gone in to the red, but it's come all the way back down. A lot of people would have cashed it out, and when BTC, they would have cashed it out when it comes to there. I leave it in because I know it's just the trend on this isn't BTC, by the way, but the trend on BTC, I see it switched. We're now bearish for now. We've took liquidity. We've got enough liquidity to go down. We're collecting liquidity at bottom. The reason I stayed in this Ethereum trade is because I didn't draw any of these lines, but if I were to draw the lines, this is what made me stay in it. If I were to draw the lines, that would have been an area of interest I would have wanted to look at. The next area for me to look at is this block here, and we come down into it. But if you see, there's not a lot there. It's taken. It's not took no like major liquidity or anything like that. So the reason I'm stopping, well, I would have been still in it, is because we've got this here. Got this. We've got all this liquidity, all that. So I would have stayed in that trade until we come down here to see what would happen in this box, and then that's when I would have thought about taking. What I like to see happen is that I like to see it tap into the liquidity of the last major structure. But every time, every time I load charts up, this is what I look for. I only drew these lines because I put it into Discord just so people could see these lines and what I was looking at. This is liquidity. This is liquidity. That's what I'm aiming at. This is what I'm aiming for. That's what I'm aiming for. That's the only reason I put them lines on. They're not multiple take profits, but if someone were to trade off of this signal, they could have put that as multiple take profits, and there would be a decent profit, to be fair. I mean, what would it come out at as? 5%. It were a 5% win. I were hoping for 10%. I think it was. I can't remember what it was, but yeah, if somebody would have took this trade, there would have been 5%. But to me, multiple take profit, I think when you get to end multiple take profit, your trade just seems like, no, it's not worth it. I mean, it'll take me a few seconds to read this. Think, right, that's that. To mark these boxes up, it'll take me a few seconds to mark that liquidity, uptrend. It'd take me a few seconds. But for me to take multiple take profits, I think it's not even worth my time looking at this chart, loading it up, because by the time you get to end of a trade, just say you've got £100 on your trade, $100 or whatever it is, and you've got it times 20, and you've got times 5%. It's going to be 100 and something. I think it's going to be about 100 and something %. So if you take profits here, and here, and here, by the time you get to that end of that, your profit is going to be absolutely a shambles, and you're going to be, well, I would be anyway. I'd be gutted with how little my profits are. Literally gutted, because I was thinking, what is the point in taking multiple take profits when it's all it does is, when my trade plays out, I've got no reward. It's risk to reward. It's not risk to disappoint. It's risk to reward. At the end of my trade, I want to see a decent reward. I want to see a reward. I want to see something worth trading for. I don't want to see a disappointment. A disappointment to me would be if I've put £100 on a trade and I've took profit off it times 3 times, and then when it comes to last take profit, I've got like 25% of my trading. To me, that'd disappoint me. That'd disappoint the whole thing about trading. Trading is meant to be a reward. You're risking little to get a reward at the end of it. Taking multiple profits, you're gonna make money, but you're always gonna be I don't know how to put it. For me, I like a trade to play out without taking multiple take profits, because when it does it, I feel like I've been paid properly and I've been rewarded properly for eyeing that trade, looking at it, analysing the chart, taking that trade. I feel like I've been rewarded for it. And that's how I see that thing. That's how I see multiple take profits. Bit of a long explanation, but that's just how I see it.
I follow you. I think it's a fair thought how you think of it. Basically, I was just playing around with taking small part of profit to make sure that I cover my stop loss. But that's all what I've done till now. One last question. Not the last trade on Ethereum, but the previous one.
This one or this one?
Yeah, the left one.
This one.
No, the left one. So
this one.
Yeah, exactly.
Yeah.
So when you went out of it, is it because of it? You have the QML in a bullish pattern over there?
No, I'll literally. 1 second, I'll get it up now. I can get it up on my phone, because I've got my phone outside of me. I watch my trade positions, realize P&L. So this one. This one, the exit price was, the entry was 1350. The exit was. I think it was around there somewhere, my exit. I ended up with something like, I think, I've got it here, 75.18%. The reason I ended up with 75.18% is because I seen it go all the way down here, but I was in 3 trades at the same time. I was in this, the XRP, and the BTC. And when XRP went down like this, it's the same kind of chart, and BTC is the same kind of chart. When it went down, I went to work, and I think I set my stop loss on the XRP because it went down to 290%. I set my stop loss because I was going out to work. I set my stop loss at local high. It had already reached 1 target, already reached 2 targets. It looked like it was going to reach the 3rd target, even though it had hit an order block. It looked like it was going to hit my next target. So I just set my stop loss somewhere here on all 3 of my trades. And then, yeah, I went to work. And then I think a few hours later, Ethereum stopped out. And the other 2 stopped out, not all at the same time, but Ethereum went first to stop out. And I think I ended up with about 75%. But for me to move my stop loss into profit, after hitting 1st, 2nd, and nearly hitting 3rd, or on the way to 3rd, and still thinking that it's going to hit your 3rd, for me, I think I've been paid for that already. Do you know what I mean? I think I've been paid. I've hit that. I mean, that's 5%. 5% trade times 20. You know, you're getting 100 and something. I think it went up to 120. I think this trade went to 120%. So for me to see that I've hit that target nicely, it's grabbed this liquidity, it's got enough power to keep going down to grab this liquidity and then probably cause an equal low and then go up. You know, that's what my thought process is in them kind of trades. So I move them into stop loss. Yeah, eventually I got stopped out at something like 75%, I think it was. That's the only time I move my stop losses into profit, or why I move my stop losses into profit, is because I'm going out to work and I ain't got time to check on these all day. But all 3 of my trades did get stopped, but highly in profit. I'm going to try and find this compression. I love that compression. It's different time frames. If you flick through your charts on time frames, straight down. And look at this. We've got example of what's showing. Mark. Oh, you want to mark? This is Ethereum, by the way. That you've got order block here. You've got your order block here. Obviously, it's bullish order block. Bullish order block fails. Bullish order block fails, selling it automatic. You get this compression. Bang. Compression with these breaker blocks. Got like really good breaker structure, liquidity down. I think it's going to bounce off this order block. It doesn't bounce off the order block, it goes straight through it. So now that order block becomes breaker block, full ranging. There's like a supply area. Then you get this compression, highs, lows, lows, high, high. And then when it gets to end, you're looking left because you want to see where it's going to when it's starting this compression. You see it starting. I think that's why I've got this line on it. See it's starting to compress while it's going up. What did I say about compression? You look left to see where it's going or where it can reach. Oh, we've got an order block here. As soon as it comes in there, that could be a target. It might reach that order block and go bang straight down. Yeah. What I like to do on my order blocks is I like to set a it at 50% target there. That's my next. This structure and this structure is the same. Yeah. The target. Target. I mean, I'm not going to say I'm not going to sit there and lie and say, yeah, I'll in that all the way from. Oh, I would, you know, like obviously it's gone straight down from here. I think what would make me come out of that, I would have seen it hit my second, and then start coming up. I would have seen this little break here. Seen that little break there coming up. I'm not always right. I'm not always like, it's not always as simple as what I'm telling you now. But I would have seen that break there. And then I would have thought in my head, the way I trade, I would have seen that break. I've had that marked out. And I would have thought, yeah, it's not good. But I mean, I'm not going to sit there and say, well, my next target would have been down here, and my next target would have been here, because it wouldn't. I mean, my targets would have been exactly what I'm saying. Structure. Exactly how I trade. Fair value gaps I hardly ever use. So I'm not going to say, yeah, I would have traded that right down there, 23. I actually wouldn't, and not at all. I would have seen a breaker structure here to the up, or I would have seen it hit this target, hit that target. Then I would have seen the breaker structure, and then I would have thought, right, I'm setting my stop loss there. I would have put my stop loss at that line, and noticed, yeah, now we're going into a bullish. Order flow might still be bearish, but been bullish for the time being. I think it's harder to do it while you're in a trade than it is to explain it. You can people can sit and explain to you all day long. I can sit and explain to you like, oh, you just do this, you do that, but that's not. I don't think it's good. I think you have to be truthful when you're explaining something. You have to be truthful about where you would have been out, not because anybody can like preload a chart, and like I didn't preload any chart before I started this live. Anybody can preload a chart and say, right, I took this position, I took that position, this is what you meant to do. I didn't. I just did it off it. That's why it's probably took a bit of time and a bit of explaining, because I'm not literally. I wanted to do it while people were here, not preload a chart so it looks easy. I wanted just to like try and get through it and explain it properly. Any more questions?
Last one for me. So the order blocks, you use them more like in a zone of interest, and then you follow with some confluences, and like you just explained. What is your criteria to draw them? Because sometimes you
well, I have three. I think it's three different. I've got a few different ways to trade order blocks and that. But For me,
Besides trading, also how you draw them. But sometimes you take the wick to the body, and sometimes you take.
yeah. I think for me, it's more of because I know the just excuse me. Because I know they're just another form of supply and demand. It's very basic. Supply and demand's basic. Order blocks are basic. The thing that's not basic is when people think the thing that's makes it people think order blocks are crap, and that is because people don't think of other things to trade with order blocks or how to trade them or whatever. I think for me, it's more of a range. For me, I can mark the order blocks out. Normally, I'll just say, I don't know, is a break of that, and just say I'll mark that. I'll mark the full area. I'll mark the full area. So it doesn't always come into there. Sometimes it don't even reach. But if you've got, there's a lot of people I've watched trade them. They'll just mark the body. Would have worked. There's some people I watch trade them. Some people, most ICT people, is it ICT or what is it? Is it again? I forgot.
Yeah, ICT. In a second.
ICT. A lot of ICT people, they just mark liquidity on either side. You know, like if it's you know, just for it to go into liquidity. For me, I mark if we had more liquidity down here to the down, I would have marked that as well. I'd mark it as a full range because what you're thinking is when it's a higher time frame order block that you're marking, and when you go into a lower time frame, I know you want to like try and get the smallest area you can, you know, because you're a high time frame. Because then when you go to the lower time frame, that's going to be a bigger area. But I think for me, if I'm looking at it, is if I'm looking at order blocks in just another supply and demand, another way of trading, like supply and demand, or just another way of like kind of supply and demand feature, I think the area is what you need to look at, because like I showed you earlier, that like a Quasimodo location, like that sometimes that don't even, sometimes an order block be up here, then you get your Quasimodo hit before you get your order block. Sometimes it don't even go to your order block. Do you know what I mean? So for me, it's a full area I would mark up. Even if we had a wick as well, I'd mark the full area. Simple as that, because I want to see something happen inside that area on a lower time frame, or after it, you know. So I'm ready to get in that trade. I want to see something happen. I want to see it grab a bit of liquidity or something like that.
Yeah. And then you look to some confluences to enter.
Yeah, and what I normally do is I just normally now from here now, say if I were looking to get into this trade, what I'd do is do that. I'd have my MACD, I'd have that on. Been oversold here, we've come back to retest oversold areas. That's it, this is just how I look at it. And then I look at like on my MACD, I look at this, the size of that, even though that's rising, momentum's not as much. Same as that. Then I look where the RSI is at the order block. To me, that's just one full going down movement. Come back to retest it here. The momentum definitely dying on the MACD. Definitely dying. That's just stuff I look at. That's just like that. And if we get a divergence as well, I just look at stuff like that. I mean, I've used a lot of things. I've used a lot of indicators and that, but I think these are the two main indicators that I use. And obviously, I use that higher time frame liquidity. Sometimes I use the volume. EMAs. If I have EMAs on, I can't find a decent area for you. This here, when it intertwines like this, when this is the 200, the 50, and the 21. When price intertwines like that, I flick the EMA on. If I think, well, hang on a minute, that looks a bit choppy, because you don't always know you're in a shitty market where it's not going very far, it's not moving. So what I always do is when these are intertwining like very closely, I tend to wait until we get like a break up or a breakdown, just to see, and then I'll turn that straight off. But I think this is one of the powerfulest indicators you'll ever get. Higher high and higher low. That's it. These three are my. If I could have three indicators forever, it'd be this MACD with this setup, that RSI with that setup. You don't even have to have bearish and bullish divergence. Higher high, higher low. If I could only have three indicators, they'd be indicators I would have for the rest of my life.
For the high low, which one do you use?
I forgot now. Lonesome the blue.
Lonesome. Okay, thanks.
Yeah. Yeah, I think that would be my go-to setup. Just these three, and that's it. Simple as that. All the rest of the stuff you can see yourself. All the rest of the stuff you can draw yourself. I mean, you know, order blocks is a simple strategy, but used in conjunction with the stuff, it can be powerful. Yeah, that's my three go-to indicators, and these are my go-to patterns and what I use. Consolidation. What I do with consolidation is I'll load this MACD chart up, just use the MACD on the consolidation, and just mark out my highs and lows. Wait till we get a break up. Most of the time when we get a break up, we'll fly back down. Or when we get a breakdown, we've took liquidity from the down. We've got a very good chance of breaking up in a consolidation. So that's what I do. I just mark the highs of every candle, of every move on this. Let me just turn the higher high, higher low off. I'll show you what I mean. I'll just mark out these on a lower time frame. That's all that white. Mark out the highest point on that white. There. That's all I do. Mark out like that when we're in the consolidation. Lowest point on this. So that's how I use it. So then I know we're in that range. You know what I mean? And that's about me. That's about it for me.
It's brilliant, mate. Absolutely brilliant. Learned a lot.
That was a lot of good information, Scopes. Good job.
Yeah.
Cheers, mate. Yeah, man. Cheers. But yeah, these are like the patterns I use. But like I say, people just use bullish order block and this. And like when I see people put charts on, I'm not saying I'm best trader in the world, but when I see people put charts and then go, right, there's a 4-hour order block here, there's a 1 hour in middle of it, there's a 5 minute, there's a 15 minute, there's a fair value gap, there's this, there's that, there's this. I just think, wow. Because I've done it myself. I've done it myself ages ago, but I just think I don't think you need it all. Do you know what I mean? It's just, I think just find what you can use and what's good for you, and then that you're good to go. For me, it's these patterns, and that's it. That and that. That's it. I very rarely have them on, but put them on. And it just gives me that extra bit of confluence. We're coming down in MACD, we're compressing up towards an order block. As soon as it hits it, we've got bearish divergence, we're oversold, coming down, bang, down we go. And then obviously any other confluence you can find, like on chart, liquidity, has it grabbed any? Has it failed to create a new high? Has it failed to create a new low? Has it grabbed liquidity to the top? If not, it's going to grab liquidity to the bottom, 100%. And that's enough. That's enough for me to trade. and then obviously the main one, order flow. That's it. I think that's all I need. I mean, I've got strategies, what use indicators. Well, I've showed you one. People have seen one or two. But for me, this is basically what I look at. I don't just look at them 2 order blocks and that's it. I look at all the things I've spoke about in this live.
That's brilliant. Absolutely brilliant. I've got a lot away from it. I'm definitely looking forward to try and code the compression zones and the the breaker blocks. Is that right? Yeah, breaker blocks.
Yeah.
Very good. The 2 things that I haven't particularly seen before, spoke about much.
I mean, a lot of people have probably seen them, but they don't ever use them. They just look at an order block and go, failed. Do you know what I mean? And that's it. End of. For me, I look at it and I think last week I put a post into your Discord and I put we've had a break to the upside. I'm still in the trade. We've had a break to the up, but keep that order block. Keep that order block into the future. It's still relevant. It went all the way back up. It did something like this. But the order block was here at this red. It went all the way back up, hit the order block, bang, straight back down. Felt like, because we're here, the order block. Keep it in, it's still relevant, it's still going to work, kind of thing. What it
goes back and
straight back down, bang. So,
You're definitely one of these rare traders that trades completely differently than the rest. And that's what you need to do, right? You don't need to trade up to 90% how everybody trades, but you need to understand how everybody trades and then be on top of that.
Yeah, I mean,
it's very valuable because this is ICT was an eye opener, and you confirms everything eventually. What he's also telling about, it's about the liquidity on top, on the bottom, and if it's not taken on the top, it's definitely going to take it on the bottom.
If you want to learn, sorry for interrupting, but if you want to learn a bit more about compression, people trade compression mostly the same way as I do, but people see them as different patterns. But if you want, I think it's month 4 of the ICT trader videos. Just look for month 4, put compression, ICT compression month 4, and it'll come up with compression video there for you, I think.
Perfect. I started with the legs of this elephant, but I'll definitely dive into that video as well.
I mean, there's millions of patterns, and obviously with things changing, I wouldn't say things changing, but with everybody using order blocks and smart money, things might change differently. You'll always see an order block for the rest of your life, for the rest of trading life. Order blocks are always going to be a thing. Same as everything. It's always going to be a thing. All of this, because you can't change the way a chart looks, or you can't change what happens when you put a trade in. When a big institute puts a trade in and it puts a massive candle in, you can't change that. They can't change the way it looks. Their orders are that big. They're not going to turn into retail traders overnight because they don't want to see what they're doing. So you're always going to see these kind of structures. They're always going to be there, but you might have to trade them differently. Just keep on top of it.
Thanks, Coop. Amazing.
Yeah, absolutely. Thank you very much.
My mouth's dry as out now.
Yeah, you deserve your.
I had more, mate. My coffee's gone cold, mate. I had more to say, but I just got like, it's obviously my first time I've done a live, and I don't really like trying to sit there and tell people, oh, this is how, it feels a bit, I don't know.
Yeah, I understand it.
I know you're helping people. It just feels a bit weird telling people, right, you should be doing this, you shouldn't be doing this. You know what I mean? But I'm just trying to help. But it was just like, I felt a bit, I don't know.
I took loads away from it, mate. Took loads away. It's absolutely brilliant. I've taken lots of great information, stuff that I didn't know. Very well explained. I mean, the breaker blocks and things like that.
This is a very good pattern, mate. Breaker box, the very good pattern, mate, definitely.
Yeah. Now I've looked into several explanations on them, and tonight I've understood them much better than I've ever understood them before. So something that I will definitely try and code as well. It looks good.
What was
Yeah.
this saying? If somebody cannot explain it plain and simple, the person itself doesn't understand it.
Absolutely.
Yeah.
Exactly.
Yeah, absolutely.
I
Yeah.
think that's the other way around with Scoop, because you tell it that simple. It's not that simple, of course, but it's very
You can put it
easy
in
to
simple
understand.
things.
It's
I mean, I mean, like without, I'm not going to like mention like any names or, but I've watched series, big long series with like 50 episodes and 25 episodes, and I could explain 50 I could explain 50 episodes to myself in
Yeah.
an hour. Do you know what I mean? Kind of thing in less than an hour. Or I could understand it in less than an hour. I'm not saying I would be able to perfect what they're explaining, but what you see in 50 episodes, I'd probably be able to learn myself or I'd be able to explain in simple terms in the hour or something. You know, just take the best parts away, the easy parts, the parts that are going to work, the parts that are you're going to be most profitable, or the parts that are going to learn you the most, or the easiest parts to
Yeah.
understand.
That's
is
what we
it
need. That's
recorded,
what we need.
David?
Sorry?
Is it recorded?
Yes, it is indeed. Yeah, yeah, yeah. It's on the YouTube channel. Wow, you've been going 2 hours and 6 minutes, Scoop. You're doing.
I know,
That's-
yeah.
that's-
Do you know what, David? I had like, I tell you what I did. I wrote. Oh, I told you then. I wrote down what I wanted to talk about, and do you know what? I looked at it and I said the first thing, and I even spoke about anything else. I even looked at book and thought, right, I'll go down this list and I'll do this first, then this and this and this. I think I did like.
I'm the exact same way.
I think I did 2 or 3 things in order and then just went on and just thought, oh, you know what, stuff this. I'm not about with that. And just went as it went. So
No, it's good. It's fantastic. It's done.
I hope everyone enjoyed it.
Yep, I certainly did.
I enjoyed
Yeah,
doing it.
definitely.
You'll take David's crown like that.
Yeah, absolutely. I mean, Johnny did a 2-hour one last week as well. So I mean, we're gonna have to start paying Discord, I think, for the amount of time we're streaming.
Yeah. But like I say, I mean, if I had lots of time in front of my screen, maybe I'd turn into a worse trader, because you've got chance to sit, you've got chance to take more trades. Maybe I'd probably lose more, but I think I'd see more, kind of thing. If you know what I mean. I don't have no time hardly on my screens. I have probably 4 hours on a night time. I think eventually I just want to. I want to not work anymore, and just sit at home and trade.
Yeah.
But yeah, I enjoy it that much. I'd like to do it full time.
Yeah.
Tell if I will be able to, mate.
I speak about this one often with. It's funny because your plan, the way you've put it together. I've been reading, which was suggested by Johnny, a book by Trader Tom. And your plan is so precise that it's almost the way that he's trading. Not in the strategy itself, but just the way that you put everything together is very, very, very good and very precise.
Yeah, definitely.
Yeah,
I agree.
Yeah, I think that's ages and ages and ages ago. I put in group something I'm writing in a notebook, and I think that for me, when I'm trying something, I think you need to write it down. You need to, you know what I mean? I didn't plan the charts. I didn't draw anything on the charts. The thing I planned is how I'm going to explain something, when I'm going to explain something. You know what I mean? That's the only thing I did. That's the only thing I did. And I didn't wrote down for ages. I didn't do no rehearsals or anything like that. But I just thought, you know what? I'm just going to get into it and get it done. This is what I do. This is what I think would be valuable to someone to learn, or to take something away from it. And that were it. Simple as that. I also got to mention what I always also do as well. I always see this in a market. I always see that. So what I always think of in a market, is plus and minus. Jesus. Plus and minus. That's how I see it. I think that makes it a lot easier for me to understand where we are instead of like high, low. You know what I mean? We've had a plus in the market. We've had an uptrend in the market.
Yep.
We need to equal that out. We need to minus that plus to equal it out. We've had that. We've tried evening it out. That warrants to me. That warrants an evening out properly.
Yeah,
and we need to do another plus, another minus, and that's how I like see things. I don't like literally draw that on chart because it looks messy, but that's how I see things. Like obviously people see retracements and that. I see like I just see like literally like a plus and a minus.
Plus and minus.
It's just a simple way. The market's always trying to find liquidity and equilibrium. Simple as that.
Absolutely.
So
absolutely.
You're always trying to minus your pluses and you're always trying to plus your minuses, and you're always looking for liquidity. So in between that liquidity, you've had your minus here, you're gonna have your plus. You've got this big gap in the market you need to fill. There's your liquidity. You've got to take this liquidity. You know so. You know what I mean? If you're plus and minus and you've got to fill the market, you've got to find equilibrium from that move. There it is. You know what I mean? That it's just simple thought process, that kind of thing. Yep. And then obviously that's when you get down to more detail.
Another thing that I took out of it was the risk to reward is important, not risk to disappointment. I love that. That was brilliant.
Yeah, of course it is. Yeah, I'm risking something, and I want to be rewarded. You know what I mean? I don't want to risk and be disappointed. Simple as that. I think that's the best way to see it.
Got to get a T-shirt with that on it. Risk to reward, not risk to disappointment.
Yeah.
Also, right. I agree with you also about the multiple take profits. It's something that, like we was talking with Johnny the other day, it seems like multiple take profits is not. There may be moving your stop loss to an in profit is definitely, but on the back testing, multiple take profits, as you said, just gives you small wins, extremely small wins, which you end up very disappointed with.
Yeah, it really disappoints me. I mean, I used it, like I said, when I use your strategies. I've used it then.
Yeah, on bots.
On bots. I use it on bots. But when even on bots, you can tell. You can tell. But I mean, it is what it is. It is what it is, and I think on for manual. You put in the time. A bot does it for you. You don't need to worry about how much money you're collecting or how many TPs you've got. Your bot is doing that for you.
Yeah.
But then when you're manual trading and you've literally spent your time to draw and watch this pattern for 9 days, or you've watched this breaker block and you've waited for 2 days for this to come back up and test that, and you get your trade in there, why on earth are you going to wait? You're going to wait 2 days for a pattern to play out just to be able to get into the trade. And then you're going to wait probably another 3 days for your pattern to play out, for your trade to play out and take multiples all the way down. Because then by the time 3 days is up, yes, my trade's done. I've got 350%. But I've took multis all the way down. You know what I mean? That's how I see it. It's disappointing at the end of it. And you've put work in and you've waited time and you've worked for nothing basically.
Yeah, I totally agree with you. But bots is sometimes a little bit different because, like you said, you're not in front of your screen, so maybe you're taking multiple take profits just to be on the safe side because it's not you that's actually making the decisions. But there's no work gone into place. But I do agree with you, and even on the back testing with bots, multiple take profits just destroys the amount of profit that you're taking in the long run.
Saving that image there.
Yeah.
I drew them just before I started. I'll put that. Any questions, or?
I was good, man. I mean, that was brilliant for me.
I have a very small question.
Yep.
So
go ahead, my friend.
When you're viewing this, or when you're establishing order blocks, is that mostly based off of price action, or is there other things you consider as well, like volume, or because I've seen people do something similar to this, but they rely on trading volume at certain points of price action to kind of establish the blocks itself. So I'm curious to see how you approach it. Just from a general aspect.
Yeah, I like that question because I used to use, when I first started messing about with smart money, I started using that volume profile. It's all them bars that go like that. It's inside your screen. I used that.
Yeah.
How do I delete that now? Oh no, what have we done? Oh no. Is that what we're on? Yeah, I used to use that volume thing, but how do I delete this, anybody?
If they go up to the top part
Oh,
of
it's
the
alright, it's
left
alright.
hand corner. Yep. There you go.
There we go. Sorry, I'm a bit. That's why I don't use some stuff on here, because I don't. It messes my screen up. So, I think for me, I used to use that volume thing, but it is good. But you can see everything you need to just from price. You know what I mean? You can see
I agree 100%.
When price bounces out of this block, I can see there's good volume there. I can see the volume. I can see the size of the candles compared to these. You know what I mean? You can see when it's having a reaction. It's just, I don't know. It's to me, I don't really need it. To be fair, same as value gaps. I mean, I'm not saying they're crap. I mean, you can see the fair value gaps. You can see them just. You know what I mean? You can see them just off looking. You don't need to trade everything like that, because if you can just see it plainly, why would you trade it? Same as when price goes. Let me try and find somewhere. Watch, I'm not going to be able to find it now. Did you see how long it took me to find that compression? Earlier at start of video, but I mean, when I see that, I don't even need. Well, nobody should need that thing to say there's a high volume node here, because there's always going to be high volume in that area, because look how many orders are going in, and you know what I mean, how many people are getting stopped out. There's a lot of action in that one area. Already, without even having a volume thing on, that is going to be like a pretty high area, and then take the full length of it in, and then go back and look how much volume's been in that one area. So without even having a volume profile range on, that's going to be a high volume area. Do you know what I mean? So if price were to go now, what we on here, Ethereum, if price were to go bullish now and have a bullish run, I know you do your targets kind of like, I watched you do yours on your ABCs. These are what my targets would be. That one first, obviously, because that's the highest height of this, like, you know what I mean, this little tiny area here. So that's obviously
of that previous trend.
Yeah, that's your first one, and then these I just want to look what price too. But ultimately, I know the most volume that is in this area, because look how much orders have been in, and it's come back out and it's gone back up. It's used it as resistance. It's been used as support. There's more volume in that area than anything, so I don't need any other confirmation to know where the volume is. You know where it is. You can see the volume. It's clear to see everywhere. There's more volume in that than the rest of this full chart here. There's more volume in that area, isn't there? Would you agree?
Absolutely. Yeah, I'm on the same boat. Like, a lot of the things that you can see off of like stuff like volume, it's pretty much in the chart. You just have to be able to identify the pockets of where price really stabilizes and fights. So I definitely agree. Sometimes and also, like, if you use stuff like volume as a way to confirm like certain positions, sometimes volume might not match up with, in your situation, might not match up with an order block that you have.
Yeah.
So if you're going to prioritize volume, it's almost the same thing as ABCs. Is when you use certain things to possibly add confluence, it can actually fog up your perspective, and you can possibly miss out on trades just because you don't get all the dots aligned, even though it's not necessarily needed all the time.
Yeah. But like, I think for your confluence and that, for me, 1 second, let me just put my dog away.
Yeah.
Yeah, just moping about. Yeah, I think for me, like, you know, like when people look for confluences and that, and they have all these indicators on and all this, or my money flow's green, this is this, and this is that, and I've got this, and I've got that. Yeah, fair enough. Yeah, man. Yeah, man. Good on you. You know what I mean? But for me, I don't want all that on my chart. I don't want all that on my chart. I literally, like I said earlier, I can find confluence just from here. That's one confluence, two confluence. Not done that, that's three confluence. There's a Quasimodo location. That's five confluences. You know what I mean? You can see most of the stuff you need to see already on that little chart. Or literally just by having a couple of lines. Do you know what I mean?
Yep.
Like,
Yeah.
just that one, just on that chart there, I can see 1, 2, 3, 4, 5. I can see 5 confluences already. Do you know what I mean? So that's just by looking at that. People would need one indicator, two indicators. They'd even need a page of indicators to get what I've just got in like 4 seconds. Do you know what I mean?
Yep.
And they'd need to
Exactly.
look at every single indicator. I mean,
Yep.
you might. I can, like I say, that many confluences in no time. So it's simple to me. And then if you think about it for a few more seconds, there's another confluence. You know, it's that simple. There's another confluence. It's just the more you look, the more you see, or the more you learn what you're trying to trade.
The less is needed. The less you need less tools. And that's how I like to say less is more. Less is more in trading.
Yeah, of course, yeah.
You need to create your own instinct, no? You need to be competent enough everything what you want to learn and see it with your own bare eyes instead of using lipstick all over the place.
Yeah. I mean, this chart here to me.
Yeah, this is lipstick.
This is messy to me. I like to keep my charts kind of clean. I don't even like these on it.
I still need somebody to tell me there is a Quasimodo pattern, but now when you say it, I see him. So it's
yeah.
I'm not
like they're not. Yeah, if you think about a Quasimodo pattern, like that might not be the best world, like, but or you know, it just depends where they are. But if you take like the actual area kind of thing, do you know what I mean? You can work them differently. But if you take the thing is with like patterns and that, you can't be clear with them because you can't be too precise, should I say, with them. They're never going to work on the dot. You'll find an odd one or two that work on the dot, and it's amazing when you find them that work on the dot because you don't find them that often that way. But yeah, Quasimodo's really, really good one. I like it. I've seen it fail quite often though, but I think the best way to use it is to use a range of like your wicks as well as, you know what I mean, the actual area. Oh, feels like it's been a marathon. Have I done more than Johnny this? Have I done more time than you, Johnny, this time?
Yeah, you beat me.
I wasn't trying to, but once you get onto it, once you start talking, you just can't shut up, can you?
You just kind of go with the flow.
Yeah, I felt a bit awkward at first, like I didn't know why shit. What we're doing.
It's definitely something to get used to.
Yeah. Like I say in the first video, so I was psyching my son up all day to do it. Anyone? Any other questions or not?
I'm going to put the link for the YouTube video into the chat right now, so anybody can go back and see it if they wanted to. Let me find it. Oh, Johnny already did it. Thank you very much, Johnny.
There's still.
No
I
problem.
believe that there may be a question in the chat scope. I'm not
Yeah.
sure.
Folks can see them age. Oh, right, I can see a few. Bloody hell. I didn't even see any of these messages. Sorry, guys. I didn't even see out like this. I didn't even look. Yeah, sorry. I didn't even check any of this. Kadaj, there's different people trade order blocks different ways. You have other ways of trading order blocks. I have my ways. They'll have their ways. Everybody will have their own little ways. But basically, what ICT would probably do is trade it more range bound. Like I say, I've watched a few ICT people actually who trade with the ICT concepts, and they just mark the order blocks completely different to what I do. I mark the full range. That some of them mark like just the wicks because they want to see little risk as possible or whatever. I don't know why they do it, but people do things differently. But I've literally seen, I know what you're on about because I've seen them do it. I've seen them mark order blocks out completely different to what I do. I just mark the full range of the order block out because at the end of the day, it's just a supply and demand, and the supply and demand is just a zone. So if order blocks is a different way of supply and demand, why not mark full order block out as a range instead of just trying to be too precise and probably not getting an entry, and then watch your position fly down or fly up into the direction it would have gone if you would have marked the range out and like set a limit order at 50% of the range instead of trying to wait for it to hit the wick or hit the top wick or hit the bottom wick. You know, if it's a bearish, you need to just work out what's good for you or how you want to trade them, what kind of risk you want, what do you want to, where do you want to set your limit orders. I have another strategy that I use. It's from the 30-minute, same thing. Zoom out on the 30-minute chart, right out, leave it on the 30-minute chart, get your order flow, see what you're doing, see what highs have been broken, see what highs are going to get targeted, see what lows have been broken, see what you can target, see where the liquidity is. Zoom back in, find your order blocks, mark your order blocks out on the 30 minutes, then drop down to your 5 minutes when your price returns to your order blocks, and mark your 5-minute order block out. Wait for price to revisit your 5-minute inside your 30 minutes. And I mark, if it's a bullish order block, 5-minute inside the 30 minutes, I mark the top of the 5-minute order block out. If it's a bearish, I mark the bottom of the 5-minute order block out. And I take the full order block then as my stop loss. But because you're on 5 minutes, your stop losses, sometimes you can get a stop loss at 0.2%. Sometimes it works, sometimes it don't. But either way, if your 5-minute order block don't work well, you're inside a 30-minute order block, then the chances are it's still going to work because most of the time, if your 5-minute fails inside the 30, price is still inside the 30-minute time frame, order block, sorry. So it's still going to work. So there's a lot of people that use different strategies. There's different ways to trade order blocks, all kind of the same concept, all kind of the same ways, but they have their own set like ways of marking, of trading, of how much of the order block needs to be mitigated, if they can use the order block again. I think for me, I know this because I've seen so many people trade order blocks, or I've watched so many people trade order blocks. And I've traded order blocks in several different ways myself. So I hope that answers your question. Anything else? Order block. I don't think I've used that indicator. I probably got it on my, what's it called? I have actually probably got that on my thing. I've got that many order block things. What I find with a lot of order block indicators and that, most of them are just like copies, or they're not updated enough, so they're not current, or they're not. There's some good ones, some really good ones, and I've tried. Like I say, I've tried a hell of a lot, but I'm hoping I can have one from David with like everything I need in just one, really. Like with my, obviously your breaker structures, your change of characters, your imbalances and stuff like that. I'd like the option, and then obviously inside of that indicator, I'd like obviously the option to turn all the options off, to change all the colors on all the lines and stuff like that. I know it might be sound a lot, but to keep your chart clean, I think if you're going to use an indicator, why not it be a smart money indicator with lots of options inside it, but as an indicator, not a strategy. And obviously with the option to turn everything off, cool everything down, blend everything in with your chart, and just flick it on every now and again, and you'll see exactly where you are. Smart money indicator though is that's what I would like. I like doing charts without anything. You can see everything you need, but for people like in David's Discord and that, a smart money indicator with quite a lot of people like wanting to, and who keep messaging and saying that they've just started doing smart money trading, or they're starting to do ICT courses, or they've been following Meta Kaplan, or they've been learning this concept and that concept. I think an indicator for some people in David's group who want to manual trade smart money, I think a smart money indicator would be very good.
Yep. I'm on it. I will. I'm gonna.
I agree. The indicators help to eyes potentially. Yes, it's right. Definitely. Sorry, David.
No. I forgot to turn my mic on again. I asked, do you use any like sessions or anything? A lot of people have been asking about ICT kill zones at the moment recently.
I do.
Maybe you want to leave some information for next week, Scope. I don't know if it's up to you. If I don't want to advance something if you already had plans of talking about it later.
Let's look at all my patterns. This is all my patterns. This is why I need an indicator off you with all my patterns.
Yeah, you do.
That's
don't
absolutely ridiculous. Yeah, that's ridiculous. But I did have. No, I ain't got one on.
Yeah.
I like your indicator though, man.
Thank you.
Pretty good.
Yeah, it's a good start. It's a good start. Seems to be pleasing quite a few people when they seem to be getting some good entries. So, yeah.
Yeah. But yeah, I did. We spoke, didn't we, the other day? I told you that I was watching a couple of videos on the guy. He has the Asian session.
Yeah.
The Asian session. Burn. High and low. I'm absolutely rubbish with a PCB. and then London session. What age? So what he does is there's an actual. I couldn't find the video or what. That's your age. So what he does is every time he does it, he sees where the price has gone from the Asian session. So
Yep, that was it. Yeah.
he always then presses down here, bottom of the Asian session, break that high, and that's all he aims at. The high. You know what I mean? To break the high, so see what.
Yeah. Yeah.
He aims to literally break that point, and he put his results on there, and they were. But I don't know whether I've watched it on my phone or on what find it.
No, I just know that it's part of. I like I said, I don't really remember who sent me the actual chart, to be 100% honest. They sent me a chart with lots of indicators to detect the ICT kill zones, and I just wondered if it was part of your strategy daily or not.
No, I don't. I just simply see. Do you know what does me a lot of times? News.
Yeah.
That's a bummer for me.
Yeah.
I don't trade news.
No.
If I'm in a trade and news comes in and it goes my way, I'm like, oh, thank God for that news. Even if it was bad news, I'm still happy because it went in my favour. But
Yeah.
I don't sit and look at news or out like that. I literally trade what I see. Do you know what I mean? So you could be in like, I did it before, man. And I were in BT, and I were in a right decent long. And it was just something like, is this BT? I know what this written. And it was kind of the same. I were in a long from down here, and the price were going up nicely like this to a point up here. Started doing this. It was nearly enough exactly the same kind of pattern as this, the chart pattern. It started doing something like this. Went down and it went back up exactly like that. Went back up and then news, and it just went boom. Stopped me right out. All like, oh no. And it was like I think it was something like a 10% candle in one move. And I was like, shit. You know what I mean? So I lost like a couple of days worth of trade, good trade. I was massively in profit, and it just went straight down. I'm like, no, absolutely gutted. And then obviously it went down to. I'll be able to probably put that on for next week. And it went down to probably somewhere here, and I bought in again here. Yeah. And I can tell you when it was exactly. I think when we went down to the 17.6, I think it was. And then I bought back in here, just climbed perfectly. Let me just BTC on because I know where it was. I think BTC.
All right, everyone. I gotta hop off for now.
It was this one here. Sorry.
All right, Johnny, mate.
All right.
Take care.
All right, Johnny. Thank you.
Folks, great job. Keep it up.
Mate.
I'll catch up on the rest of it later. But definitely good stream.
Okay.
I'm nearly done now. Anyway, I'm about to finish now. Anyway, yeah, I think it was there or somewhere. It was somewhere here, and it dropped. That where it was. It was somewhere like this, and it dropped right down the price. I don't know, but yeah, we dropped right down, and I were absolutely gutted.
Yeah.
Yeah. So it just upset. News come out, and it absolutely killed me. So yeah, right off. I were out of my trade, and I lost something like 10%.
Yeah, I've been posting the calendar recently for the FD.
Yes,
calendar,
I've seen it on today.
And I kind of adapted slightly my trading strategy to not so much to but just to know the big events, to know when things could pop off, and especially in crypto at the moment. So I just adapt my trading to that slightly a little bit more.
This were a trade I actually got in. It come right down to this 17.6, and I bought here, and
yeah, I think we both did, didn't we? I think so.
Yeah.
I
think I bought here. I think when it come back down, and it went all the way up, I think I don't know how to. It looks clearer than this before. A lot clearer. This is it. This is it. This is exactly how I run. Exactly like this. I bought here somewhere. It come back down, and then I bought, and we're going all the way up, and I think I were at 360 something percent.
Yeah.
And on my phone, I do my trades on my phone on my ByBit app.
Okay.
I had the option to close all right next to where you do your realized P&L.
Yeah.
So, on app. So I went to press that and it closed all my
Oh,
trades.
no.
I know 306, and it's just gone all the way up there because that was the trade. I thought, right, 17.6. It's the lowest we're gonna go. That's what I thought in my head at the time, and it actually is. It actually has been.
Yes, yeah.
You know, so and I would have holded that. I know I would have seen this come down, but I would have holded that 100% because it kicked me out, and I were absolutely fuming because I had like 4 trades open and it closed every single trade.
Yeah, yeah.
And I were only putting realized profit and loss on because I wanted to show I wanted to put it in group and say, I'm staying in this one. I'm at 300 something percent. I can only imagine. It's done and dusted now, but I can only imagine what kind of price I would have got.
Oh yeah, yeah.
Do you know what I mean? So yeah,
I kind of wonder if they didn't put that button there on purpose, don't you? Because it
Yeah,
happened to me as well.
Yeah. So right, yeah. Anyway,
thank you very
David,
much.
I
It's
think
been
that's about
absolutely brilliant.
That's about me
Absolutely
done.
brilliant. I've written loads of notes. I will start adding to start building the indicators and things like that, so other people can try and follow in your footsteps.
Yeah.
FOREX Factory. Thank you very much.
Yeah,
Sorry,
that's
Karen.
all right. Yeah. No, it's all right. I was just going to say I'm trying to find a good forex platform so I can do some forex trading.
Yeah, me too. Recently, I said that I was doing that. One of the cheaper ones I posted into for fees. The guy come in and did a little bit of a speech a long time ago, thanks to Vlad. I think that I posted it in there. I think it was anyway. But I don't know, to be honest. I'm going to be looking as well to do a bit of Forex as well.
Yeah, I'm hoping to anyway. But yeah, I'm just going to keep. I've done courses this week as well.
Yeah,
stuff I already knew, but I think that's a good thing to mention as well. If you're gonna start on courses, you'll learn a lot from them, but you'll just take the best bits out of them.
Yeah. I'm very much like that.
Right. Anyway,
thank you very much. Thank you. It's recorded on YouTube.
Been a pleasure, guy.
Thank you very much. Thank you for everybody for joining us. Great stream. Fantastic, mate. Absolutely brilliant.
All right.
Enjoyed it.
Nice.
And,
Good.
yeah.
Have a nice night.
Have a nice evening,
right.
everybody.
Cheers,
Bye-bye.
everyone. Peace.
Bye-bye.
David, are you going to stay on a bit longer?
If you have a question, I'll quite happily stay a bit longer. If anybody has any questions, no problem whatsoever.
Be sure you end the stream.
I'm just going to end the stream very, very quickly. Thank you very much, Brad. Let me just put the outro here and end this stream.